May profits be upon you. How you doing? I hope you're doing well. Welcome back to my YouTube channel. All right, this is the second video on the playlist. All right, for the week that's ahead of us. That will be from August 29th to September 2nd. All right, this is the second on the playlist. All right, and we're going to go over pound USD today. Now, the first video is about the FX futures, and we covered all the currency futures. All right, and look at their individual strengths and weaknesses, and so we can best pair them together and take trades with some good information, some well-educated, we can make better informed trades. That's all I'm saying. So you want to check that video out. I'll leave that at the end of this video. I'll leave it for you on your screen so you can click on it. Now we're going to check out pound USD. Let's first take a look at the RT money meter. The RT money meter tracks the rate of change of each individual currency future from a swing perspective. All right, and we are going to look at this through a 15-week period. That's what the rate of change is based on, a 15-week period. I update this every week to track the progress of each individual currency, but it's a 15-week window that we judge it by, and then I rank them. All right, look at the USD. Last week it was ranked at number 1 at 4.25. This weekend, today it's ranked at number 1 again, 3.95. A very marginal shift, very marginal shift in strength, negligible actually, and it's kind of, the USD moves sideways. Same deal with pound. The pound last week was ranked at number 6 at minus 417. This week it's ranked at number 6 again at minus 404. Another marginal shift in its strength, and it moves sideways. All right. So the takeaway here is we're pitting the strongest against one of the weakest. All right, and we should have a decent high probability situation going on here. All right, what is this? Why is that there? Okay, so we're going to take a look with some quick top-down analysis. Look at the weekly. All right, what I want you to make note of is the swings, the swing structure, because structure is king. You remember that. All right, this is a swing low. This is the swing high. This is the swing low. All right, a lower low. Aha, lower low, lower high, lower low, lower high. It's lower than this one. All right. So what do we expect? What is the next structure point? We're looking to attack the lows here because we have a lower high. We're in a downtrend. The next point that we expect to make is a lower low, period. You see how simple that is? Okay. So we are bearish, right? Am I right? We are bearish, right? It's not that easy. All right. We have a break of structure here. All right. This was the lower high to the lower low. And then we broke that lower high. That means we are bullish in this market until this low is taken out. Then we turn bearish again. All right. But this is swing structure we're talking about. On the higher time frame, the macro level, we are bullish. But on this time frame, the weekly, we've been bearish for quite some time. I hope you understand the nuance of that. This is internal highs and lows. All right. But the swing structure is bullish. So what you have to have in your mind is, if this low holds, and it's a strong low because it broke structure to make a new high, it did its job. Okay, so when price comes down here again, I'm expecting this low to hold. I'm expecting that low to hold. All right, there's some kind of expectation for that. All right, because we broke structure to the upside. All right, now what happens after every break of structure? A return to impulse. No matter if it's on the monthly, no matter if it's on the 1 minute. All right, the minute one time frame. Structure is structure. After a break of actual swing structure, after a break of actual, this was this was a lower high, a lower low, so that was string structure. We broke structure to the upside. You expect a return to impulse. That's it. After once you break market structure, doesn't matter, price is fractal, the markets, the structure is structure. So I'm expecting price to hold at this low, and we are at a weekly demand zone. All right, the demand zone could be marked this way. All right, but this is the extreme of this weekly demand. You understand? And it's also a daily zone of demand. So I got WD on this here. This should produce quite a reaction. That's all I'm saying. In theory, that's the theory. Okay. Now, there's also part of the theory that in every downtrend, in every downtrend, lower low, lower high, lower low, lower high, lower low, all of these lows are perceived to be weak because it doesn't make a new high. That's what allows the downtrend. All right. And price comes through it. Price comes through it. All right. There's one expectation. It's conflicting. I understand, and it can confuse people. But in this situation, is this low strong or weak? It broke structure. Now, if it stayed below this, if this was the lower high, and we made the lower low, if this didn't get past it, if this area didn't get past it, and we started seeing that, I would think, yeah, price is going to attack this low. But because we broke that, now I'm thinking this is stronger than weaker. You understand? The nuances, they'll get you if you allow it to. Now, we come down here, we see that the daily is also bearish. All right, we're breaking lows all the way down. All right, we're just gonna zoom in here, and we can see that price has broken this high, pulled up for that lower high, and broke this low, broke that low here. All right, to make a new lower low. This is the daily now. This is the daily structure. All right, we're respecting that high with a lower high here. Boom. And I expect this low is going to get swept. It failed to make a new high, so it's weak. So it'll become a target for liquidity. And that's exactly what happened. And what you want to notice, the thing you want to note is we are breaking a demand zone here. We wicked past it, and now we finally got a daily close below it. This zone is done. So as soon as it closes and breaks there, what am I doing? The same thing I said in the last videos, last week. I'm marking my zone of supply. The supply will be found in the reaction, the extreme of the reaction to this demand zone. All right, this is the reaction before the break. This is the supply that breaks this, that is responsible for breaking this demand. Got it? This is the flip zone, is what I'm talking about. All right, so price has the potential to come back up here, is what I'm saying. Price has the potential to come back up here, or trade into this unmitigated zone of supply. Sure. Right? I just marked the extreme of the supply. You can mark it this way. All right. Because I know some of you are really caught up on how to draw, when you're drawing your supply zones and demand zones and whatnot, and you want to have that bearish engulfer and all that good stuff. That's fine. I'm waiting for price. You want to see if price is going to come back and trade into the range of that bullish candle. You want to see if price comes back up here. It may touch here and just drop. It may go deeper to the midpoint. All right, the 50%, the EQ of this zone, and then drop. We don't know. We don't know. What I suspect, though, because of the bearishness, because it's a complete textbook kind of bearish engulfer in which it engulfs the previous candle before it, top and bottom, the full range of that candle. Not only that, it engulfed the candle before that one too. This is a very bearish indication. Okay, so I'm looking for price to continue lower. It may not come back up here. It may build, may pull back a little bit and then come down and touch off down here and give us our reaction. All right, then maybe we'll come up and mitigate this zone. That I'm leaning more towards that scenario because there's a lot of momentum in this candle, and that's what I'm looking for. All right, if I can draw that, I'm looking for this kind of situation. Boom, and we'll see what happens after that. All right, I'm thinking that we're going to get some more bearish price action towards the middle of this zone. I'm thinking that this is what I'm thinking right there. All right, what I want you to do is be prepared. Okay, be prepared. Let's go to the 4 hour so we can get down and mark something good. What I want you to do is be prepared. This is a well-made bearish zone. All right, that zone could extend down to this right there. That could be our breaker right there. Okay, did you see how price slammed through it? I like that. This is also looking at smaller internal zones of demand that price broke through. You would expect price to pull back a little bit and give us that that trade into this area here. All right, the trading into the range of that bullish candle. So we'll see that, because this could happen. Boom, boom, boom. All right, just a little pullback. You know, we might see a gap down though. I'm saying be prepared for both. This could happen on market open. I don't know what that was. We can see this on market open, so just be prepared for that. All right, I'm going to be prepared for it. I tell you that. We've already broken through this demand zone, so we may see the pullback and happy times. I'm looking for this. I'm looking for that. That is going to be a 100 pip move, ladies and gentlemen, just to get down here. And I don't know about you, I could use a 100 pip move, and especially if I add it from here. All right, this could, you know, again, this could extend into this, or we might get a touch and go right around here. All right, what you want to do as soon as price touches here or touches here, all right, you go to the 15-minute time frame and you look for your confirmation entries. All right, ask me about that in the Discord if you don't know what it is. All right, and I've demonstrated it in these videos. Just check my videos out and you'll see it. That's all I'm going to give you. That's all I got for you on the pound USD. This is the 4 hour. This is going to make a nice trade from here. This would make a nice buy to sell scenario. We just got to get our confirmations here, and we're going to be patient for it. If you want to be aggressive, and try and jump in at market open, don't get gapped up. All right, I'm a more conservative type trader, so if I see price come up here, I'm going to be very happy. If I see price open here, I'm looking at the 15-minute immediately so I can look for my confirmation entries. Okay, so those are our two situations there. Let me make sure I draw this here. Boom, 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 boom. Okay, got it? I hope you do. Smash that like button for me. Smash it. Smash the like button, and make sure you subscribe to my channel so you can get notifications of my updates and any new videos. Also, I want you to leave a comment. Let me know that you're looking at this setup and it makes sense to you. If you have any questions, leave me a comment. I respond to all my viewers' comments. Okay, I'll see you in the next video. Thank you for watching. Check out the futures video on the individual currency strengths, and I'll see you in the next video.